Good afternoon, ladies and gentlemen, and welcome to this week's review of the trades. Obviously, today, Friday, has been quite a volatile day already. We've had the news this morning that Donald Trump and his wife Melania have been diagnosed with coronavirus or COVID-19. I'm not sure which is the correct way to describe it these days. Markets have reacted dramatically, both first thing this morning and again later this afternoon. So there've been two reactions to this, I suppose. You can see there with the big. Now we're only looking at a 5-minute chart here, I think. Yes. So you can see the big drop off first thing this morning. Thankfully, I've managed to close a gold trade just before then, because gold will have obviously rallied in the opposite direction. So we have the big drop off there with the first piece of news. The Dow falling to a low of about 27,120, 125 before starting to rally. And then trading in a reasonable range throughout the day, falling back a couple of times, but not quite hitting those lower levels we'd seen earlier in the day. And then finally, just before the opening bell in New York, again a bit of a sell-off, and then a rally back up to almost the levels that we were trading at first thing this morning. A little bit of way to go in that, although if you look at the top of the range, not a million miles away from where we were before the news broke. Trying to decipher this information is obviously what's key. So when we were falling away first thing this morning, I bought futures a couple of times in this range, a bit smaller trades than I would normally do. But it is like catching a falling knife. And the reason for buying rather than selling and trying to follow a market lower was that when I was trying to rationalise what this news meant, the only conclusion that I immediately drew was that Trump's term was coming to an end anyway. This, if anything, was not news that was going to last too long in the marketplace. So you have that instant overreaction, which was more dramatic first thing this morning when the news first broke, and then you start to pick up from that point. So there were some nice trades from around this level and a move back up to the upside. And when we look at the results in a minute, you'll see that we had I had a particularly good trading day today, yesterday as well. So some nice wins back to back that have resulted in some considerable profits this week. But some undoubted volatility in this period. A little bit longer term, I think the fact that we've rallied both in the European session and then rallied again when the US markets have opened. You can see quite how dramatic the rally was when the opening bell went in New York. For me, it symbolises the fact that Trump's term is coming to an end. So regardless, there is going to be a new president come November whatever the date is. I was going to pretend that I knew the date then, but I don't. I think it's November the 2nd. But there is going to be a new incumbent in the White House in November, and I think the markets are showing that they are pretty much accepting of that at this particular time. But obviously, as we moved into the opening bell in New York this afternoon, there was some concern. Whilst we've already had this rally off of the lows during the European trading zone, there was some concern about how the US markets would react. So that sell-off again prior to the bell, and then as soon as the bell opened, we've shot to the upside and currently still around those levels at the moment. So for me, signifying that the markets are okay with the transition from president to president. Admittedly, there will be uncertainty in the next few days, potentially this weekend if there is any change in the story, but like I say, it's less than 4 weeks now until the election. So I think the markets are pretty much just taking it in its stride at this particular point. Gold, just to have a quick look at gold, you'll see the rally this morning sorry, I've got to change the chart. So we've got a 5-minute chart there. So you can see the rally from about, I was thankfully awake early enough to close out my gold trade from yesterday. We've seen the rally, and then we've moved back down in stages, but touched off about 1917, 1916 and a half on the high. Currently back down at 1903, but we were trading at 18, just above 1890 before the news started to break. So a fairly significant movement in there in gold, and a movement back down to the levels that we're trading at now. Obviously, gold is that safe haven that people immediately turn to. I think over the last number of years, decades even, I think some of the safe haven trades have changed significantly, and currencies sometimes are viewed as an alternative to gold, notably the yen. And whilst gold could run away with itself from these levels, I still believe that the upside is quite limited. So just looking at the results for this week, and I think I mentioned this earlier in the week, the number of times that I've lost on a Monday is starting to worry me. Last week, previous weeks, that's 3 weeks in a row where I've lost, 4 weeks in a row where I've lost on a Monday. And I think it's something like 5 out of 7 weeks where I've lost on a Monday morning. So certainly going to be conscious. I'm not going to disappear this Monday, but I'll certainly be conscious of that around the way that I approach the day. And as you can see, sometimes it's about feel and how the market's reacting. And obviously on the Monday, it's the start of a week and there is a bit of time to get used to it. So on Monday, 3 trades stopped out, 203 points worth of a loss. Good day Tuesday. Wednesday up until just before lunchtime was a fantastic day. 12 trades out of 12. I wrote about it in the Telegram channel. Wasn't really considering trading. Continued grey line across the middle there obviously signifies where I think I'm starting to overtrade. Got a little bit angry in this period, actually giving all of the previous profit back. Compounded that then with another couple of quick losses in the Dow, and then eventually just about managed to claw it back to close out the day in a slight profit period. And then Thursday and Friday, obviously today, have been pretty much flawless, and 874 pips returned in the last 2 days, and I know that everybody has profited quite well from that over the last few days. So there's a few things, as always, just in relation to things that I know or see that I did wrong during the course of the week, and just trying to highlight those. So this gold trade, I just yellow it all out at the moment, so we can see that. So this gold trade, it was just before the ADP numbers came out. Again, for me, we're looking, and I've repeated this a number of times over the last couple of weeks, let the number come out, let the markets move, and then react in accordance or as you wish from that particular point. But again, it was trading before the number, and then losing money because I traded before the number. Could have let the move happen and then decided where to trade from there. And as you can see, as a trade later on in the day, or the last trade of the day, I actually sold around that level. Wasn't instantaneous, and bought back just a little bit lower as the market traded off. So having patience and letting the move occur immediately after the number is a positive. And then obviously from this particular period, we enter that realm of possibly over trading, and the trading should have stopped around that period. There wouldn't have been a great deal of effect on the Wednesday, but they certainly, obviously on Thursday was a little bit different because it had been a positive day up until then, and continued to be so. So You know, for me, I still look at everything in relation to what's gone before, and thankfully it had been a hugely profitable day on Thursday. So risking one or two more trades probably has a bit more sense to it than on Wednesday, where I'd certainly got a bit angry with the trades at that particular point. So on Wednesday, I think there was about a 270 pip profit in the first 12 trades of the day, and ultimately I managed to turn that around into a 100 pip loss fairly quickly. But the over trading, definitely another issue to look at. I think one of the things, just in relation to Wednesday morning, the trades that I put on and the 12 out of 12 that I was returning at that point, and I've spoken to a few of you this week on the mentoring program, and some people have targets where, you know, they might make 50 pips and then stop. You know, setting yourself targets isn't a bad thing. I've mentioned previously that, you know, some of the best traders that I've met over the last few decades are the ones who make their money on a Monday and don't trade for the rest of the week. So the overtrading rule for me, it was still prevalent on Wednesday and Thursday, regardless of the fact that on Thursday I still managed to return profitable trades after that, after the overtrading period was reached. There is one question. Please do, if you have any questions and you are logged on in time to get your questions in, then please do post those. There was one question that was asked of me earlier, and you know, it is something that pops up from time to time. And when you find yourself holding a position for any period of time, and it's in a loss-making position, how you trade out of that. And I have mentioned previously in the past that, you know, as much as trading is about making money and trying to seek those profitable trades, trading, in my opinion, is also about managing the position that you have. So we obviously talk a lot about not carrying positions overnight where possible, taking your loss or taking your hit on the day that it happened. There are occasions where I do run a position overnight. They tend to be in gold more than anything else, where you can have a slightly longer term opinion of what's going to happen. But if a position is against you, regardless of which product it's in, the first thing that you need to do is to get some stops in and get those stops in fairly quickly. Just in case, like this morning when you wake up and the Dow, you know, the diagnosis of the President of the United States has come through and the market drops off 450 to 500 points. You know, if you were carrying a position into that particular movement, it gets very, very painful very, very quickly. And it can get to the extent on that sort of move, if you've over-risked or oversized a particular trade, that you're down considerably very quickly and risking your account effectively, and in that blow up type scenario. So it is important that you put stops in place. The one thing I caution you against where gold is concerned, gold does tend to overreact during the Asian trading zone. So, you know, I'd want my stop to be reasonably wide during those hours, and you can then tighten it up during the European and the US trading day. But get the stop in and then try to work out how you're going to manage that position. Do you cut some of it immediately, which is the more prudent way to approach it? Or with those stops, can you start to bring those stops lower as the market is going lower? You're not going to hit the eureka moment where you get out of, well, if it's one trade, you may, where it trades back to your level and you're able to get out of it. But if you have several positions on that are moving against you, it's unlikely that you will hit that eureka moment and be able to get out of all of them. So as the market is moving back to your point of entry, where should you take your loss? And it's not vital that you take a loss. You can try to continue to run it, but in my 30 plus years experience of trading these markets, If I was asked to look at all of the trades that I'd ran that were running against me, that I continued to allow to run for a period of time, how many of them turned profitable versus how many of them got close to break even and then ran away from me again. The balance is distinctly in favour of those that got close to my level and then ran away again. So you will see that when I'm trading from time to time and I get close to a point of entry on a trade that's been bad for a period of time, I will take a loss on it. And the way that I look at it is not necessarily that trade in isolation, but in terms of the way that I've traded for that week. You know, does a 20, 30, 40 pip loss really damage me on that particular week? The comfort of being out of the trade and being able to think more clearly, I think is by far a bigger positive. I think the more that you, and I know people experience this, and I know that some of the people who are using our Telegram service do, the more that you are carrying a position, or the longer that you are carrying a position, the more that it affects the way that you are thinking or conducting your trading, and that needs to be guarded against. So whilst I have carried trades for considerable period of time, it's not something that I recommend. Carrying that piece of baggage into your trading every single day has to have some influence on the way that you're approaching the day and that you're approaching your trading. I think many of you would agree with me. It's not necessarily that you are protecting the position, but I think there is an element of that, and it's not to anybody's benefit at all. So if you get close to a level that you've been carrying for some time, I do encourage you to take losses as you approach that level. It all is about, you know, what is the financial damage you're doing to your account. That's where you originally or you initially post the stop losses that we're recommending at that time, and then how close do you get to your entry point before you start to cut. This weekend is a difficult weekend to give anybody advice in relation to that. You know, gold is trading at 1906. We've been to 1917 this morning. We were probably at 1891 and looking to go lower. Quite what is the risk appetite this weekend? The index or the Dow is showing that, for me, is showing certainly that there isn't too much fear out there. Gold isn't rallying away. So I think, you know, some reasonable stops on a gold position at this point. If you have a gold position that's against you, then you know, some reasonably wide stops should be okay this weekend. But unfortunately, I can't tell you the future. I can't tell you what's going to happen to Donald and Melania Trump over the course of the weekend. I do, of course, wish them well, but at the same time, markets could respond to a worsening of that situation. You know, there's nothing in the markets at this particular point at 10 to 4 on Friday evening UK time that suggests that's going to happen. But you know, it's a long time until Monday, so keep an eye on the Dow in terms of a barometer for how much risk the markets or fear the markets think is out there, at the same time as you're looking at gold and the movements that you see in that area. Okay, I'm going to leave you there. Thank you very much for joining me, and we'll see you next week. Take care.